You guys will see in a moment that these guys have got a bunch of industry experience. So I'm talking with Gary Bhomer, principal and founder of Tel-Consult, based out in Australia. Has fantastic context around the Asia Pac region in the telecom space. And we also have Paul Wade, senior consultant at Mobilise, who has a bunch of experience across different functions within the telecoms industry. So we're really delighted to have both the guys. Welcome, Paul. Welcome, Gary. Thanks for taking the time to join us today. I appreciate it, guys.
Thanks, Hamish. Good to be here.
So, yeah. So today's topic is competitive pressures in the telecoms industry, and it's a super interesting topic given where the industry is today, I think. So we've got a bunch of talking points. But before we jump in, maybe, Gary, if you wouldn't mind just giving, the listeners a little bit of background on yourself, give a bit of context, if you wouldn't mind.
Sure, Hamish. Yeah. Hi, everybody. Gary Bhomer. I've been in telco industry for just over 30 years now. Most of that in Australia, but also some in Europe with Vodafone, a lot in the wholesale area. So, very much a strong wholesale background. For the last 8 years or so, I've run an independent telecoms consultancy out of Sydney, Australia. And yeah, that's it really in a nutshell, just briefly.
Thanks, Gary. I was just remembering the last time that we saw each other. We've known each other for ages, but I think the last time we saw each other was in passing at the departures terminal in Sydney, right?
Yeah,
must have been about two or 3 years ago.
Yeah.
And you were, I think you were going on a business trip, but you were with your wife at the time. That you're going to an MVNO conference or something, weren't you?
Yeah,
which
probably.
is a bit of it's an annual journey for you, isn't it? Annual pilgrimage.
Annual
back
pilgrimage, yeah, absolutely.
Yeah. Very good, very good.
Going again this year. I'll be over there in May in Vienna.
Oh, very nice. Yeah. That's going to be a good event, I think. Paul, please, mate, if you wouldn't mind introducing yourself and a bit of background as well.
Yeah, sure. Like you guys, I've been in telco for a while now, but probably not as long as you, funnily enough. I only got into telco about the 2000 mark. I fell out the finance industry into it by mistake on there and ended up at Vodafone. There seems to be a common thread here with everybody you run into these days. At some point in time, they've been at Vodafone. Did a number of roles there, ended up in group strategy. For a while, for my sins, got sent off to some very unusual places in license bids over the years, which I think really sort of lends to my background of finance as well as of engineering. Believe it or not, Hamish, I never told you this. I actually graduated in mechanical engineering, not electrical engineering. So that's a weird one for you guys.
Interesting. I never knew that after 15 years of knowing each other, or even more than that a little bit. I didn't know that.
I used to do a lot of, did all that stuff, foundry work, all the real hard stuff like that. So there we go. So after Vodafone, I did a lot of work in the Middle East for telcos. I actually, one of my more interesting roles, I was established the second operator in Palestine. So that gave me a interesting perspective on the world there, living in the West Bank, with all the troubles that go on now. But in those days, it was a real challenge. We got the operation going there in Palestine. After that, back to the UK, fell into the consultancy business, like a lot of people from our industry on that, and was working for this strange company called Mobilise. I don't know if you ever heard of them, have you? On that? But over the last few years, had a really enjoyable time working on some very interesting projects with Hamish's company across a range of industries, which is quite interesting as well. Not just pure telco, but how other companies from other industries are moving into this space as well, which I think is a growing trend. As you can start to see it. So perhaps what goes around comes around. I'm now seeing a lot more of the finance industry getting much more interested in it as well. So it takes me back to my roots in a long way. So that's me in a very quick nutshell there.
I think that's one of the things that I don't think I've ever mentioned this, Paul, before, but I think that's one of the things that gives you an interesting dimension into the telco space, is that you didn't originate in it. I think you came from other industries. So I think sometimes the perspective that you have into the telco space is a little bit different, and I'm guilty of being telco purebred. So I finished my schooling and went straight into telco. So I think sometimes I find myself a little bit, tunnel vision. But sometimes you look at it a little bit differently, which is good.
I should confess here too that I, in the early 90s, I worked in the finance industry as well. In fact,
Did
at
you?
Bank of America in London. So,
Is that right?
yeah.
What were you doing there, Gary? What was the role that you were doing?
I was contracting. It was in my backpacker days. So I probably spent well over 12 months there in various stints, but in their swaps department. Yeah.
Interesting.
There you go,
That sounds like a good way to earn some money to fund your travels.
I was doing a lot of reconciliations, unfortunately. But
yeah, that sounds a bit boring, but hopefully it was a good day rate. Yeah.
Yeah.
Very good. So let me just briefly set the stage about what we're going to talk about today. And competitive pressure in the telecoms industry, is suffering. Intense competition from OTT players. Pricing pressures because consumer expectations are changing, like unlimited plans. I want all I can eat. Like, traditional services are becoming commoditized, voice, SMS, data, and regulatory scrutiny as well. So a lot more around, how operators can play or how they can't play in terms of mergers and acquisitions and roam like at home regulation, all this kind of stuff. So I feel like we're a bit of a crossroads now, and that's playing out in in different ways in the industry, particularly with from an M&A perspective. So maybe the first point that we've got here: market consolidation versus competition regulations. And maybe I can just start with with a merger or acquisition merger that's happening here in the UK at the moment. And Gary, you've got some really good insights about the Australian market there, so we can dovetail into that as well. But everyone in the industry, it's one of the largest mergers, I think, in the mobile industry for many, many years. But Vodafone and Three are merging in the UK, got approved by the regulators just in the last 6 months or so, I would say, after probably a 2-year-long consultation process and deliberation from the respective regulators. It's going to create the largest mobile operator in the UK, 7 million subscribers. So they're going to go from Voda and Three, going to go from third and fourth spot in the market respectively up to number one in mobile, that is. Massive deal. It's going to change the landscape here in the UK. 4 to 3 operators, which is a trend that we've seen in other markets as well. The age-old question, with M&A is the trade-off between, creating a more efficient operator that can invest in infrastructure, invest in digital infrastructure, offer better services, achieve better profitability, which leads to more reinvestment. So that versus, competition for users and consumers, traditionally, I think, it depends on who you talk to, but traditionally, 4 to 3 markets, like mergers from 4 to 3, have led to increased prices over time for consumers. So maybe I'll throw it out, Paul, to you to start with, mate. What's your view on what's happening in the UK market, European market in general, about the pressures that the industry's facing from a margins perspective, profitability perspective, and then how that's playing out in terms of mergers and acquisitions across Europe, but maybe particularly the UK market?
Yeah, it's very interesting, really, because when you have to unpick the whole situation at time, you look at the European market, it's highly fragmented. Big countries, small countries, small countries with 3 operators. If you look at it from a logical economic perspective, they shouldn't be profitable if they have to build their own networks out. We all know that the capex required, and I think this is where the industry shot itself in the foot and played to the regulators' picture, was the fact is, the introduction of 5G basically mean rebuilding all your networks, and the capex involved with that was horrendous. So I think it was inevitable. Consolidation is required. If you're looking at it from an economist perspective, the logical answer would be that each country, you should have if you like, separate the physical infrastructure from the service side on that, because what's the point in building, 3 operators building 3 sets of towers, co-location, network sharing, all that, you're beginning to see that. I think Gary can talk to it much better in Australia. It's actually happening as a very good model for that. The operators have been kicking and screaming and fighting for years about avoiding bringing in national roaming. From a user perspective, it's so logical, it stares you in the face. That if you can't find the signal from one tower, you get it from another tower. The fact it's owned by another operator, it's not beyond the ability of technology these days in the billing systems to be able to shift the billing aspects of those calls around. We already do it at the present time. If you make an international call, how many hands does it go through? How many people take a slice of the action for transiting call on that? There's no difference why it couldn't have been introduced, from a national roaming. So I think there's this disconnect between, the reality of what could be done versus the personal vested interest of these various telcos on that. Logic will tell you that there has to be consolidation because we can't afford it. Every government is under pressure to raise revenues, taxes are going up, cost of living going up, etc., etc. Where's this money going to come from to provide the service? And I think also from the public's perspective, they've not seen any real difference between 4G and 5G, so they're not going to pay for something they're not seeing any difference on, on that. So you're not getting this like from the car industry where you're buying, a Ford on the one side and a BMW on the other side where there's an appreciable difference. This does the same job, yes, but different levels of delivery on that. So there's very little room for price increases to drive up new revenue streams from that perspective, whilst the capex is going up all the time. So that's a very long way of saying that I think the model is actually broken. How it will play out, I think, is more of a political nature necessarily than a commercial one. There'll be commercial drivers, but the regulators will be sitting there going, well, how can we protect the consumer on the other side, which is preventing it. So the interesting thing is the merger of Vodafone and Three. So what? It's inevitable. It happens in every industry. Why should the telco industry be different? Sorry, that's me having a little rant here, but it's just coming from outside of the industry. You look at it from the outside, you go, well, this is crazy. The market cannot support this amount of networks.
Yeah, it's interesting, and I 100% agree, and I'll kind of pose the same to you, Gary. Same question about maybe the Australian market, but you raise an interesting point, which I'll tie back into MWC, is that the hubris is definitely off with 5G, right? Like there hasn't been the return for all that capex that's gone in, and I think there's been kind of whispers around the market for probably 2 years that is 5G really going to be kind of delivering a return on investment? But I think nowadays it's like, no, it is not. And that's playing out in MWC as well. I think in previous years, I think you would have seen a lot more around 6G, and 6G wasn't there. Like the new generation of mobile network, I think you would have seen more about it. But I think the industry's starting to wake up. It's like, this is not a business model that's going to work. We increment and charge more per generation of mobile network that you move into. But Gary, love to get your thoughts as well. Either on what you see from afar in the European market, or how you see things playing out in the Oz market in terms of consolidation, competitiveness, the market in general.
Yeah, no, thanks. I mean, just touched on so many different points there. I could go on forever, so if I don't stop, just shut me up. I guess my first point is, how many markets do exist now where there's more than 3 MNOs? I mean, there's so many. Like Netherlands went from 5 to 3, Australia went from 4 to 3. There's no. I mean, three players it should be a competitive market. So I agree with you, Paul. No, so what? We're going from 4 to 3. I think there's still enough competition there. The operators have made a massive investment in 5G, not just in infrastructure, but also in spectrum. They've had to acquire mid-band spectrum, millimeter wave. Like they've spent so much money on spectrum for 5G as well, and they're just not seeing the returns. And I know the industry is the same in Europe too. I mentioned the anemic growth. the operators are lucky to make back the return on invested capital. The ROIC figures are pretty poor. I think Telstra just reported in their latest results. It did improve slightly by 0.2 percentage points to 8%. And then you've got TPG and Optus somewhat below that. So that's the industry leader. On the flip side of that, if you look at they're all integrated operations here. They've got fixed and mobile, and fixed businesses are in an even worse state. And actually they're looking to their mobile networks as being their growth engine. So again, Telstra at their recent results announcement announced they're going to invest another $800 million in their network. So the situation here is a little bit different in that Telstra has a very strong market proposition in that they have the best coverage by far and away. Like, it's about, in terms of population coverage, they're at 99.7. Optus and Vodafone now, I'll talk about that a little bit later about what they're doing in terms of network sharing. They're about 98.5, 98.6. So it's not much in population percentage terms, but it's about a million square kilometres. So Telstra has about just under 3 million square kilometres of coverage, 4G coverage, and in a country the size of nearly 8 million square kilometres. Whereas Optus and Voda now probably got just below 2 million square kilometres. So about 1 million square kilometres behind, and that makes a difference. So that does very much, give a strong claim to Telstra, and they've had that leadership position for some time now, and they're going to further cement that through this investment. So they're going to continue the leadership position. So I guess to try and summarise all of that, whilst the industry is going through a lot of challenges, I think we are starting to see growth here in Australia. And actually, one thing I get to this as well is that the operators have started increasing prices. So to your question before, Hamish, about 3-operator market, I'm not so sure it's so much a result of a 3-player market, but it's a result of profitability and sustainability. So since around July 23, the MNOs here have started to raise prices quite substantially, in fact. And everyone's playing by the rules and increasing their prices, and they're forcing that through to their MVNOs as well. So their wholesale prices are going up, and that's resulting in the MVNOs having to put their prices up as well. So the industry as a whole is moving up in terms of their prices. So, we've all been around a long time, right? And, it's probably the only industry I know where prices continue to decline over time. And I think we've now hit that. Well, certainly in Australia we have, and I think probably in other markets as well, where that dynamic is now shifting and prices are starting to go up. I mean, infrastructure, spectrum, labour, all of that.
Interesting. That's a really good point.
I agree with you, Gary, in as much I think we've hit the bottom of the cycle with regard pricing. And I think what was clear is that market share was driving an awful lot of this price competition. On that, keep the investors happy, keep the market share up, etc., etc. And they were just kicking the can down the road all the time, but it's catching up with them now. And I think 5G was actually, the can hit the wall. It couldn't go any further, and they had to, so now you're beginning to see, one would say, reality beginning to creep back into this. After all, at the end of the day, the businesses, they have to be profitable.
Yeah, it's true.
They're not subsidised, for that.
Yeah. Can I ask you a question, Gary? Like we've seen price hikes here in the UK market as well. But what's the inflation been like in Australia? Has it been like, I'll give you an example here in the UK. So like the inflation has been bananas here in the UK. I think each quarter they're talking about kind of between 1% and 3% inflation over the last kind of 2 or 3 years or so. Which, when you annualize that, like it's crazy, the cost of living crisis here in the UK. The UK is acute because of Brexit and a whole bunch of other stuff. Let's not talk about politics, but all of the operator contracts have a tie-in to inflation. So by default, they're allowed to increase at minimum by inflation. But there is a lot of controversy around the market here that has said that they've increased, considerably the price hikes over and above inflation. and use it as maybe a mechanism to kind of, drive prices up and increase profitability. But and a lot of it is justified, but I think there is a good amount of fat in there as well. And it hurts consumers. But in Oz, how has the inflation been? Like, have the operators been arguing that, we need to increase prices because of inflation, or has it just been like, we need to change the game here in terms of our profitability?
Yeah, initially, and look, by the way, inflation rates I think have been similar here as what they were over there. So I mentioned that pricing started to increase in July 23. It's actually July 22. So they did start out as CPI link-based increases, which resulted in a 7% increase in 2023 from Telstra. So that's, and CPI was running at, pretty hot. And then actually during, I think, the following year, the Telstra basically made a statement saying they are moving away from CPI index price rate rises, which, code was, we're going to increase it in line with what we need to do in terms of what the market will bear. So most of their postpaid plans went up by $2 to $4 in August 2024. So it's gone up quite substantially. And obviously, in most cases, that's been accompanied with an increase in data allowance. But everyone's got so much data. I mean, I think even at the low end, I think most people aren't using what's in their data. So who wants 100 gig, for $80? I don't, not many people.
Yeah, you never use it. Yeah, you never use it.
That's right. Yeah. But a couple of other things they've been, and it might be similar over there, a couple of other things they've been doing to differentiate is either at the low end plans, limiting it to 4G only, and you only get 5G as you move up to the higher tier plans. Speed capping is also in terms of at the lower end, you might be capped at 100 meg, then 150, 250, or uncapped. So Telstra retails lowest mobile price plan in the market is $65 a month.
Whoa! Holy mackerel!
That's Telstra's retail, right? So then they've got their sub brand, of course, which offers. I'm going to say 25, maybe it's around $25, $30 a month. So even the lowest price plan in the market now is around, it's been lifted from what was $10. There was this $10 plan with one unlimited voice and data with unlimited voice and SMS with 1 gig of data. And that's now out of the market. So, sort of $20 will get you maybe 5 gig of data on MVNO.
Interesting.
The whole market's shifted up.
Interesting.
I think Hamish, that reinforces what we were just saying there, in as much as that the prices in Europe especially have dropped to below economic levels from a business perspective. And if you look around markets around the world, in the US, and Gary was saying about Australia and everything else, they're probably much more realistic than they are around Europe. And I think that may be, the European operators are complaining about lack of revenue. Well, it's because they've allowed their prices to drop too low on that, and there has to come a reckoning. You look at every other industry; it's exactly the same.
Yeah, there's almost this market perception, right? And also regulators as well. They've been trained to expect consumers will consistently get lower prices and a better deal. Well, it's just not sustainable. I think there's got to be some, reckoning and recognition that this is not a, and they can't keep charging massive prices for spectrum and so on. It's not a cash cow.
That's. I know that's another point we were going to touch on. I really do think because the governments are now, as you say, Gary, look at spectrum sales as being a cash cow to balance their books. So you're getting a political element all the time creeping in here. It's ironic, isn't it? On the one hand, you've got the regulators want you to have cheaper prices, but their bosses are wanting to charge unrealistic money for the spectrum. At the end of the day, so they are in some ways the architects of their own problem.
Do you know what's interesting is, prices have gone up, and I just did a quick search there. I didn't realize that that was the profit margins of the operators in Oz, in and around. So I think you're saying Telstra was roughly 9%, who's got the best profit.
That was ROIC. Yeah, ROIC. So.
Okay, got it.
Yeah.
Got it.
Yeah, mobile margins still probably. I mean, and that's across the entire, set of products. That fixed and data as well.
Yeah,
NBN's had a big impact here as well. Of course, we built a wholesale network, government-funded wholesale fibre network for home broadband. They've also gone into business broadband, and that's really made it. It's very challenging to make decent margins on NBN.
Yeah. It's really interesting. Like Australia is such an interesting case study for operators in general, and then this coverage point, like you mentioned it before, I think either during or before we got on the podcast, that massive country, most of the population are in areas that are probably relatively reachable, but then you've got these kind of satellite cities, satellite towns, you've got rural population as well that are, some can be 10, 20, 30 kilometers away from the closest the closest town or city. And, those people want to get served, right? Like they want to be able to access the internet like everyone else does and access digital services. But the business case for an operator to deploy out there is super challenging, right?
Yeah. So the government has been throwing, that's probably not a good term to use. They've been putting a lot of money into helping co-fund regional expansion. So we're up to round 8 now of the Mobile Black Spot program. So it's been going for probably 10 years now. Every year, like the government will fund, like put a $40 million or more together to help fund regional expansion. And initially that was very much, built will contribute 50% of the capex. That has now shifted to being so it used to be a passive sharing model, basically, we'll help fund the tower. There was no, there kind of was in the early rounds, there was no requirement for allowing others onto the tower. It kind of was, but it wasn't enforceable. So they've obviously lifted that up now where, you get more funding if you allow others onto your site. And in the last couple of rounds, and the state governments are getting more involved too, because we've got 3 tiers of government here, in terms of trying to fund active sharing models. So that's where sharing the radio, sharing everything, even the spectrum in some cases, to more of an active sharing solution. Sorry, Hamish, just one other thing I wanted to mention, because people might not be aware. One of the other dynamics and of the Telstra network in the Australian context is that network advantage that I spoke about that Telstra has, they keep that to themselves. So they don't, if you're an MVNO on the Telstra network, you're on their wholesale network, and their wholesale network very much mirrors what the next nearest competitor's network looks like. So you can go to Telstra MVNO, but you're likely to get something that's more equivalent, probably a bit better, but equivalent, let's say that, to the Optus network, and now the TPG network, because they've just done a sharing deal as well, which I can talk about.
What do the regulators say about that? Because that feels pretty controlling type behaviour, and obviously, it's a differentiator. So from a commercial perspective, go for it. But when you talk about, regulation and competitiveness and
trying to rein it back in, Hamish, that's the problem. So when I spoke about the Mobile Black Spot funding, have a guess how much of that Telstra's gotten over the years?
Probably a good 80% of it, I guess, maybe, or
75%. And that's because there's this moat now, right? So when you're building, new coverage areas, it's giving Telstra, it used to be, it still does, have to be a new coverage area. You're penalised if it's overlapping coverage. So once this moat was built and Telstra had this network advantage, Vodafone and Optus say, well, we just can't, there's no point us building a site which is 100, 200 kilometres from our nearest base station. So, it just exacerbates the issue. So that's partly, that's a big problem as well. But there's been calls for Telstra to have to open up that part of the network that has been, government co-funded.
Yeah, got it. Their argument will be we need to make sure that we're getting a return on investment on those assets so that we can continue to invest in it. If we start to offer it at a wholesale discount, that means that there's potential for less investment to go in to continue to build it, which is a pretty legit kind of rationale, isn't it?
I've worked for Telstra, I don't know. Absolutely. Yeah.
But there are other models, examples. If you look at the other utilities, on that, where the government has basically mandated universal service obligations on that and sharing. If they really want to get because they could even mandate national roaming.
I guess as a publicly listed company with lots of that's it's challenging. If they had their time again, Paul, I don't know if you know the New Zealand model. So they have this regional connectivity group. So what they did there is all three MNOs got together with the government and agreed that they would build one regional common network that everyone would share. So that in my mind is the best possible solution. Now, there's no going back to that though, unless you start from that. You got it.
There's too much cannibalization, too much downside risk to switch to that model, isn't there?
Yeah.
But so is that in New Zealand? Is that one network that everyone shares on, or is it only like across the country, or is that only in regional areas?
Only in regional areas.
Only in regional areas, right? Okay, yeah.
In Malaysia, they built a. Oh, you probably know this. 5G wholesale network.
Well. Yeah. That's one of the. That wasn't the one I was going to refer to. I have heard about that one, but in Mexico, they Altan Redes, I think they're called. I can't remember exactly, but they had a similar strategy, and I think it was going back a few years now. So it was 4G focused rather than 5G. But it was a wholesale only network, and I mean, I think you can read up to see that it's had some challenges, and I think it's just maybe gone through a debt restructuring and a purchase or something like that. But maybe a different market, super price competitive, that market.
But I think as Gary pointed out, I think with the underserved areas, there has to be some sort of cooperation solution on there, because it's just not economically viable, but it's also politically unacceptable for a government to disenfranchise chunks of their popopulation by not ensuring there's a service.
They've got access to digital services.
Telstra, there's a USO obligation on Telstra, but it's still being serviced by copper, and it's basically being phased out. So there's a whole debate now about there's a USO, which is Universal Services Obligation on Telstra to provide voice calls, and then the Universal Service Guarantee, which is broadband, which has to be provided by NBN. Now, the whole LEO sat area obviously is creating a massive. Well, it's. I was just at a regional remote conference in Canberra 2 weeks ago. That was the first one of its kind, and the LEO sats will be transformative for a country like Australia. And particularly when you've got direct to device, that'll initially be SMS and then voice, and in time, maybe data. We don't know how fast or how quick that'll come. That not just from a backhaul perspective, but direct to device is going to be transformative. So, I think that'll really open up. We've got a lot of remote communities that really don't have. There's only might be one provider or no provider, So, and they are looking to fund those communities as well. So there is funding going into those communities. So there's a lot of money going into remote and regional coverage.
Yeah, I mean, you've kind of dovetailed into another topic that we had on the agenda about LEO and Starlink and that as a connectivity solution for rural and remote. Starlink is out there in Oz, I guess, isn't it? Right, Starlink is there.
Yeah, and they're being very successful. I think they've got 200,000 odd end users here. Yeah, more than what the NBN satellite service has.
It's crazy, isn't it? But the NBN one uses like MEO or GEO, I think, doesn't it? They don't GEO, yeah. So it's different latency, different bandwidth and stuff. But like Starlink is an incredible example of disruption in the telco space, if you ask me. And you look at their subscriber growth in a relatively short period of time. I think over 3 or 4 years since they launched. I read some reports that they've passed 4 million subscribers. And the valuation of the company because of that growth, and I think because they've got somewhat of a moat that they're creating in some of these areas, the valuation of the company is just through the roof. For me, it's super interesting. Direct, I can't remember what the terminology was used there, but direct to device, I think it is. And T-Mobile talked about that with Starlink, collaboration with Starlink a little while ago. I'm going to play devil's advocate a little bit, like 100%. I think the path of the evolution is to go to data as well, direct to cell or direct to device. I think the challenge, like in London at the moment, Starlink have stopped selling services in London because they can't handle the capacity. And this is one of the things, like when I first started to read about LEO, I was like, wow, this is huge. This is going to completely substitute the terrestrial networks. But then when you dig further and you understand more, and we're seeing it now in London, is that there's huge bandwidth constraints. Like there's only so many users that they can plug into, a satellite or a region, let's say region being served by several satellites at one time, and maintain good bandwidth, or reasonable bandwidth, let's say. So, awesome. Like serving the, rural and remote communities that haven't had, good service connectivity. But when you look at the future, is it going to substitute? Is it going to be complementary? Like, what's the limit that it can go to in terms of penetration? Yeah, I'll leave it open to you guys to provide thoughts.
But that opens another question there, Hamish, really, is that you talk about London, fine. Why do you need it in London?
Exactly. Why would you start with London?
But again,
I tell you why,
again, this comes back.
The service providers are pretty shit in some regions around London. Fiber and 5G, the networks have been underserved here, like underinvested, and there's shit like connectivity for a lot of service providers.
This is undermining the whole concept at all. In as much as we've seen it time and time again with the telcos, with the rural issue. I live in Wales, for goodness sake. We can't even get any signal at times on that. The telcos, being businesses, will look at where the concentration of customers are on that, and no matter how many incentives or anything like that, they would go, I'm going to spend how much to service, a couple of hundred subscribers, or actually, I can service 10 million in London. Where they're going to put their money, they're going to put their money where the concentration of the people are, and you've seen it time and time again from all the way from 3G, 4G, every time they keep promising it's going to happen, but none of this happens because economics will tell you you want to sell to where the highest concentration of people are on that. It's not, so this is the conundrum they face all the time. So unless there's some mandated action by the regulators, government, call it whatever you want, this is a perennial problem. It doesn't matter it's 5G or 6G or 7G or whatever it is. I still think we'll be facing the same problems in 10, 20 years time on that. And as you point out with satellite, these satellite owners are going to go where they can get the best prices. They're going to get the best prices from the telcos who want to service those areas they get the most money out of. And it isn't going to be the poor sheep farmer sitting in the wilds of Wales or in the outback.
I would add another angle to that, playing devil's advocate again, is I don't know whether because the industry's been chasing its tail with data growth over the last probably five, maybe even 10 years, where every year there's been double-digit growth in data, even more in some years, 20, 25% if you go back 2 or 3 years. So the consumers have just been growing and growing. But the reports are now over the last 6, 12 months or so is that growth rate is plateauing. Yeah. So rather than having, 10, 15, 20, 25% annual data growth, you're seeing like 10, 5% data growth. And so the path, and there's a lot of industry analysts out there that talk about this, and some that have predicted it. But it's starting to slow. So when you tie that back into your point there, Paul, about are you going to see this constraint on 4G, 5G fixed networks and stuff? I think the consumption is slowing, which means that when you look at a LEO service as a substitute, maybe it is going to be sufficient for those rural and remote communities going forward in the long run. But in places like London and big populated areas, it's just not going to be enough. There's not going to be enough bandwidth to be able to serve those customers in the way to. So it's a complementary product that can be added, or service that can be added to an MNO's kind of product portfolio, rather than something that's going to just substitute them
Yeah.
Yeah.
Look, I mean, there's only so much Netflix you can watch, right?
That's it.
But I think just to counter that point, I agree. There's certain areas which are maxing out in terms of current Starlink capacity, but they've only got they're probably 25% through in terms of the number of satellites they're wanting to launch. So and that's just Starlink alone. And then you've got OneWeb, you've got Cooper, you've got AST Space Mobile, you got there's the Chinese ones. There's going to be a lot of these satellites, and not all of them will survive, of course. But I think the capacity will be there. And by the way, these satellites burn up after about 5 years, so they need to be replaced. So if you've got 20,000-30,000 satellites up there, you've got to replace all of them within a 5-year lifetime. That's involved there. But I think it is a very, very complementary alternative to terrestrial, but I don't think it should never replace fibre, Hamish. I'm really surprised to hear you say that it's so poor in London. I think it can never be a like for like replacement for fibre, in my mind anyway.
I totally agree with you. So I had it. In London. We had Virgin Media as our fibre, as our broadband connection, and I won't use the word fibre because it was actually an older technology that they were. It was still copper to our house, but they had an older technology which I can't remember what it is now. But it was an enhancement that greatly increased the speed that they could achieve across copper, but it wasn't fibre. And that was
you've got to get copper out.
But that 100%. But that was running around kind of majority of Southwest London from Virgin, and doing some research after experiencing it for kind of 2 or 3 years, it was like a known problem in the industry, and it was a huge investment. And then the O2 merger came along, and then so they didn't do the reinvestment. But so what I had with Starlink in London was I had it as a backup service, because Virgin would go down so often that I would have, I couldn't, working remotely now as we do, there's no way that I would be able to function properly professionally if I didn't have a backup service. So I had the backup service running, and it was early days in Starlink's life, so it was probably not that much, bandwidth draw down. But it was a really good complementary service, and I agree with you. I wouldn't be saying that you'd substitute for fibre, because you just never would. You just don't get the same performance. Just generally, let's call it like that. But as a substitute for poor connection, or a backup if you've got some issues with whatever power or whatever, it makes sense, I think.
Yeah, even satellite. You're going to have bonded satellite solutions as well. If you use GEO for non-latency sensitive applications like streaming, and you can have LEO for the more time sensitive offerings. By the way, just as an aside, so we're coming up to an election here in Australia, so there's been a lot of promises made and investments made, so that to get the rest, the NBN has a multi-technology mix, as they call it. So it's fibre to the curb, fibre to the home. Fibre to the curb is effectively, it sounds like what you had with copper from the local, or fibre to the node or to the curb, with the last bit being copper. So government said we're going to do away with that, the current government, whether they get re-elected or not. So they've just announced a $2 billion funding envelope to get everybody off copper and onto fibre. So
Interesting.
Yeah.
Does that sound like enough? 3 billion, did you say?
In terms of what's remaining, it's actually, there's only, don't quote me here, I reckon about, the cost per premise is astronomical. I can look it up and provide it later, but I think it's a couple of grand almost per premise, to get that final, because most people I'm here on cable, HT. Can't remember now in the blank, but just to get those, there's a whole bunch, but the copper ones are getting off coppering onto, and that's in the metro areas, because outside of metro, they're on fixed wireless. You know, they just expanded the fixed wireless network. They've spent $750 million on that.
Interesting.
To upgrade that. Yeah.
This has been awesome. I'm going to round us back around to the agenda. And we've talked. Like, I mean, I could literally talk all day on this kind of stuff, like major geek mode, when we talk about this kind of stuff in the industry. But just to get us back on track a little bit. So I think maybe if I summarize a little bit what we just talked about is consolidation is a good thing. Profitability needs to happen in order to reinvest in the future of digital services, in any telco market. And also, the revenue opportunity for telcos is changing. It's not there like it was. Customers are wanting, unlimited, it's being commoditized. So that's creating the pressure that is leading to the consolidation. And one other thing that I might just ask you guys about, like spectrum for sure. I think spectrum, like when I hear about like Germany's 5G spectrum auction, was just the astronomical amount of money that was raised. And I think personally, as was 5G, those types of costs from the government, vendors charging, for 5G that didn't return. My sense is that is taking value away from operators to reinvest in things that are actually going to matter, So governments, and, they've got CBRS in the States, you've got, I think, White, what was it called here in the UK? I can't remember, where they're basically opening up the radio network and the spectrum so that it's free to access. But it's drawing very much needed capital away from initiatives to drive the next, wave of innovation and services. So, like, that leads a little bit into some of the topics that we had on the agenda next, which is around where is there, we know the challenges, where is the opportunity for operators going forward now? And there's a couple of points that we had in the agenda here, things like, services, innovation, like super apps and bundled services and stuff like that. But before we jump into, that layer of where service differentiation could happen, I'd be keen to get your guys' thoughts on Open RAN and, where you see that tracking over the next several years. Like, how has it performed versus people's expectations? For me, it was like, 3, 4, 5 years ago, it was like the golden goose. Like, this is what was going to change some of the major problems with the operator model. But keen to get your guys' thoughts. How do you see it, have performed versus expectations? Where do you see it going from now? Maybe Gary, I can start with you.
Yeah, look, I'm probably not, other than to say it's been very slow. There's not been a lot of promise, a lot of hype, and not a lot of movement, I would say, based on what I've seen. But then again, I'm not the the expert in this field, so it's hard for me to comment really.
Yeah, got it. How about you, Paul?
The big vendors have still got the market by and large.
I think that's the answer. We all keep saying, I'm not the expert in this field. Who is? This is the difficulty I have. I'm not pure techie at all, but I have difficulty in understanding how this all fits in. As you said, it's hyped. Everybody talks about it, but it's almost like it's hard to grasp it. And it's this static conversation that amongst some very clever people that the rest of us are excluded from. I think it's emperor's new clothes, effectively. And I'm not taking the technical ability away from it at all, but I find it difficult to see where it impacts upon the real life, on that. So I'll put my hands up and say, I don't understand it either.
Well, I think that's a challenge. I mean, you guys, we've all been in the industry a long time, and we know the industry. If we don't understand it, like, that's got to be the case for a lot of other folks in the industry as well. And I think it's the case. Like, I think that the promise was that it would make the radio network, which is one of the most expensive parts of the capex, that an operator has, and the opex that an operator has. It was going to make it more affordable. I think that was the ultimate aim. There was like major vendor lock-in with your RAN vendors like Ericsson, Nokia, those types of guys, and by opening up the components within the RAN network, so that vendors could interoperate with each other, and that's the main thing, I think, is that you could bring any vendor into your radio network and they could interoperate with other components and other vendors within the network. But from what I saw at MWC, from what I've heard over the last year or 6 to 12 months, there is a lot more narrative in the industry is that it hasn't delivered on what it was designed to deliver, and the momentum seems to be coming out of it. It certainly wasn't present at MWC as much as it was the prior year. And if I, in my layman's terms, because I'm not an expert in this space, but from my understanding of what has happened is that in principle, it's a great idea to be able to bring in multiple vendors into the RAN architecture or ecosystem, because you drive competitive tension with different vendors, rather than being locked into one vendor. Maybe you can be a bit more creative in some areas of the RAN network because of that. But ultimately, it's super complex. And when you try to do that, bring multiple vendors in, you actually then have to spend a shitload of money on systems integrators who do understand how to bring everyone in, bring all the components together. And I think you see it with Dish, for example, in the US, who, it's quite easy to read up on some of the challenges that they've had, both from just implementation, because it's so complex, but then also quality of service after they've launched it. Rakuten was heavily involved in Japan. Drillich in Germany has been heavily involved in it. I think Drillich is probably the best case of a commercial launch that's worked well. I think in my opinion, you'd put that down to just sheer brute German engineering force. I think they've just figured it out because it's part of their DNA to get that stuff right. But it hasn't delivered. I think it hasn't delivered on what it was intended to deliver.
Hamish, you have to say that the incumbent network vendors have done an amazing job in protecting their patch.
Yeah.
I remember having a conversation with one who won't be named, but they said, we have an open RAN network, but also then arguing against it by saying all the interoperability challenges and everything else. So, you do the same, right? So, and if you're an incumbent operator and you have an incumbent supplier that you have a strategic relationship with, which a lot of these operators do, what are you going to do? It's
and I also think the big danger they can see also is, you're right, Gary. They are protecting their network, which is the one thing they have left, basically having sold off their towers and everything else. Is that if they adopt this open RAN strategy, it just makes it much easier for the hyperscalers to edge up closer and closer to them. They can just, surreptitiously acquire vendors, which they're quite capable of. They've got the money to do it, and eventually they just move up the food chain until they've eaten them. And you can see that.
Yeah.
I'd like that to the SIM world too, Hamish, and I know it's very close to your heart and where you work a lot. So who are the big eSIM providers? It's still the G&Ds and the IDEMIAs. It's not, there's some new providers out there, but how much market share have they managed to grab?
Yeah, definitely. That's a good question, and it ties into kind of the next flow in the agenda as well, and like moving up the tech stack into kind of the services differentiation. And it was interesting to see in Mobile World Congress, like you see eSIM a lot, you see it a lot, but there is very clear segments of the eSIM market. There's like connectivity resellers that will call themselves eSIM. They'll classify themselves as eSIM, because that's the marketing hook that gets people to go, oh, okay, let's go and talk about that. Then you've got your hardcore DP plus, SMDP plus providers, which is the eSIM platform, like Tally's, G&D, IDEMIA, Valid. They're probably the top four in order, I would say as well. I think G&D and Tally's fight for top spot year on year. But they're like nuts and bolts. They provide the hardcore secure service and infrastructure that sits behind it. And then you've got folks like us, which is I would classify ourselves a bit different to all those guys, which is we provide eSIM, but we provide the software layer around eSIM. So it's like, what can you do with eSIM other than just provision a service, the digital journey and, device change and mobile number portability, those types of things. So yeah, but I think the hardcore players like Tally's, IDEMIA, just to answer your question, Gary, they've got, between the four of those guys, they've probably got 90% market share, I would say, 85% market share. And then you've got a bunch of, without being derogatory to them, tier two players, who are good in certain markets. They're good in certain use cases, like Nordic eSIM, for example, Monty Mobile, Linksfield. There's a whole cohort of tier two and some bleeding into tier three that, they provide a cheap and cheerful kind of eSIM service. But if you want to do something creative, if you want like bulletproof security, if you want bulletproof, technical capability, you can't beat the likes of like Tally's and IDEMIA and stuff. I went on a bit of a rant there, but it's it's interesting space, and I'm conscious of time, and I don't want to keep you guys too much. It's late for you too, Gary, I think as well, isn't it? In Oz, but I think maybe what I can bundle these set of questions up together and ask, like, if we move up the tech stack away from network and core nuts and bolts in the core network, like, where do you guys see an opportunity for MNOs, telcos, service providers to differentiate themselves with products and services, at that customer layer, not the network layer, and with that differentiation, maybe combat some of these margin pressures that we're seeing from the core services that they offer. Maybe I can flick it to you, Gary, first.
Yeah, look, I'm going to say it. I think AI has a big role to play. So from a cost efficiency perspective, and in terms of customer service perspective, Gen AI, large language models, even a digital onboarding, having an AI-enabled, onboarding process, that will reduce a lot of cost and make the onboarding and the customer experience process a lot less, less like frictionless, like a lot smoother. So I think that's got some ways to go, and I think that's very much a positive for the industry. So that whole digital experience, and I think it's particularly in Australia, and I've seen it done well in some other countries, but it still hasn't really taken off. And again, this is an area you very much play in, Hamish, so you'd know this better than most. Another area that we don't talk a lot about AI is around the decision intelligence domain, which is really around using machine learning, and AI to help predict, outcomes, like, where how do you optimize your marketing budget? Who are your best customers? Where are they coming from? How do you get more of those? So using that, that whole environment and then your in life base, how do you optimally manage those? Like, how do you, cross sell, upsell? Is a customer, how do you predict when customers thinking about maybe leaving and preventing churn? So that's an area actually I can talk about that because I'm doing work, and I work with a partner here in Australia, Source AI, who are very much in that space and have been for a number of years. And that's, I don't think anyone's really cottoned on yet. And actually the whole Gen AI piece has just confused the market. you know, and think that's what AI is all about, but it's not. It's a much bigger and broader topic, and I think operators, I think they've got to be very targeted in where they spend them. They already do that, right? They prioritize. They've got to target. They're spending so much on infrastructure, network rollout, spectrum, that how much headspace and how much money do they have left to spend on these areas that are really going to optimize the customer experience? They're doing things like reducing from plans from a few thousand plans to 100 plans. That's all good simplification. I think if I'm an MNO, and TPG said it, in their announcement, they were focusing on growing their mobile business, focusing on controlling costs, which they can do through technology and AI and things like that, and really strategic partnerships. And Telstra said that at MWC as well. How do we, as an industry, partner more rather than try and do everything ourselves or themselves?
Interesting. Yeah. Interesting.
I would tend to agree with you there, Gary, in as much as I think there's almost like two strands to this now. Is one is how is AI being used by the telcos themselves to improve their internal efficiency, and that does translate down into how they improve their marketing. What I fail to see is much translation into how it benefits the end user. How does it simplify the onboarding process? How does it do away with the necessity for answering 10,000 questions just to change a SIM card? All those kind of things. There's less emphasis on that side of things we're seeing at the moment. Hopefully it will start to filter through. And it's a bit like, you could use AI when you go, okay, I want to get a new SIM go to Vodafone 3, or I want to change my operator on that. Why do I have to go through this whole process of filling out my whole name, background, history, bank account, credit worthiness? All this is open. Things like open banking is available. There's no linking in from your application for a new for a new account with open banking, which can do it all in the background on that. So you can just go, oh yeah, I'd like to go to Vodafone, I'd like a SIM card, and then it goes, yes, thank you, here you go. Or no, you're rejected. Whatever. There's no need to go through this huge onboarding menu driven approach that we have. So we're not seeing much of that yet at all, because I think that is actually much more, again, the telcos are not really in the mindset. That's more like the fintech business on that. And what we've been looking at, and you mentioned some of the projects you're working on as well, is that we're looking at how we do embedded connectivity into fintech products. So it's almost turning it around the other way. These guys have got their onboarding, credit checking, KYC, ALM, all this kind of stuff down to a really fine art. Why do we have to reinvent the wheel? And why aren't we actually leveraging all the good work those guys have done to do away with all the grunt work, all the things that really annoy customers on the other side? I think that's the key thing, is that AI can be used really well in those types of scenarios to improve the customer experience. The customer experience will drive the decision of who you're going to buy from. At the end of the day, we're commoditized. It used to be, which phone do you want to use? Your phone decision would drive your network decision. Well, that's gone now. That's delinked. And also the fact is, there's been no, whether you talk about an iPhone 16 or an iPhone 15 or whatever it is, there's not a huge amount of differential there. So that purchasing decision based on differentiation has disappeared from the handset market. The differentiation in purchasing decision on which network you use has disappeared as well. So where is the next? Where do you create this differentiation? The only thing I can see at the moment really is you could use AI to make life so much easier for people. To buy from you.
Yeah, I mean, I agree with everything that we've said there. It's so true. And I think AI presents like a massive opportunity for efficiencies. I think the jury is out a little bit about whether it can drive incremental revenue in some way, but in terms of efficiencies, 100%. And to echo what I think you guys have said there is, it feels like, 3G, 4G, 5G, like the incremental opportunity with the next generation kind of gone. Device seems to be kind of gone in terms of an incremental opportunity. So customer experience, and we've talked about customer experience a lot in telco over the years, and I think there's varying degrees of companies or telcos that do it well versus that don't do it well. But I always liken it back to this customer experience differentiator. I always liken it back to the kind of the transformation that happened in the banking industry maybe 5-10 years ago, where, well, maybe not even that long, but in and around that range, where you had like big stuffy kind of high street banks, using the UK as an example, like Barclays, and just customer experience was not really on their radar unless, you wanted to go into a store and stand in a queue and speak to someone. There was differentiation there. But then you had these neobanks and fintechs like Revolut, Monzo, there's a bunch of them now. And, their model was customer experience. It's like they had other products and services in there as well, but it was like, how do you tie all that together and make it super easy and convenient and consumable for the user? And like I use Revolut now, both me personally and the business use Revolut Business now as well. And just the experience versus Barclays is night and day. Sorry to all the Barclay guys that might be listening out there, but it's very, very different. And it's it's the new age of banking. And I see a similar thing that could happen in telco for sure. But I think we touch on something that's a problem in the telco industry. I think it was you that mentioned it, Paul, is that I feel like, with all due respect to everyone in the telco industry, I feel like there is a problem around innovation culture within the telco industry. It's just the mindset's not there. Like when you compare it to, big tech or what's happened in banking with some of these neobanks, like it's just like, where's the brains going to come from to drive this change? And maybe it's not within the telco industry. Maybe it comes from outside,
Yeah, no, I'd agree with that. You need some almost adjacent industries to start to really, come and bring some of that innovation to the table. However, what has to go with that, and this is not the case in Australia, is you need a thriving, competitive MVNO market, and the market here is we talked about it briefly before the call. The level of consolidation that the MVNOs are being bought at, the largest MVNOs are being bought up by the MNOs, and so the level of consolidation and buying up and sub brands that are now on MNO networks, the independent MVNO market is shrinking in Australia, and they're so tightly controlled. They're actually very light MVNO model here. It's more a branded reseller model. It's almost impossible to differentiate. So, I'd really like to. I know some of the European markets. I worked in the Netherlands for 3 years running the wholesale business for Vodafone there some time ago now, but it was a much more dynamic and competitive market, a much more open market. And I think you need that to some of these smaller players going to be a bit nimble, a bit quicker, and bring innovation to the market. That then forces the MNOs to lift their game in this area.
Yeah, you'd like to think so, Gary, but if you then look at like the likes of Smarty, Voxy, all these branded sub-brands of the MNOs, they've adopted this digital first approach, and they're pushing it. It just actually indicates what was wrong with their main business. On that, but they're not brave enough or willing enough to actually take that whole concept back into the main business.
They're not going to disrupt the whole industry. They're not going to disrupt themselves. Yeah.
That's the dilemma, isn't it? The disruptor's dilemma. I think that's what it's called. Where you innovate and then you end up eating your own lunch, and cannibalize your own customer base.
And you can't upset your investors.
No, this is the other thing is that the industry is geared towards most of the MNOs. It's geared towards short-term incentives for the individuals, the execs. It's like, what do we do this quarter? What do we do this quarter? Drive subscriber growth. The metrics are a little bit contrary to supporting innovation. I've got one more question, which I'll throw out of the blue before we wrap up here. We talked a little bit about eSIM before. We talked about disintermediation with Starlink, OneWeb, those types of guys. some hubbub around the industry in recent months about eSIM and the ability for OEM device manufacturers to disintermediate the operators as well and go direct from device to consumer by selling plans direct from device to consumer. Apple plan, a customer opens up his iOS device or Android device, whatever it is, goes into a particular menu item and says, oh yeah, that looks nice. No operator sign, there's no brand in there other than the Apple brand. What do you guys think about that as a possibility? Likely, unlikely?
Inevitable.
Yeah.
At the end of the day, I really think it is inevitable at some point. If you control the device, and why shouldn't you control the connectivity? If you actually take that back, do you remember? I'm going to take you back in the old days when PCs started becoming mainstream. On that, they were very much niche products, and the internet was very, very new. But when they started shipping PCs ready programmed with a choice of internet provider, and all people had to do was click on a button to connect themselves on that, it meant that the huge growth was driven by the OEMs of the equipment, making it easier for the user to connect on that. So you take your next connect thing, is that why shouldn't you take your Apple iPhone out of the box? Why shouldn't you just be able to fire it up, look down the list of your connectivity providers, choose the one that's suitable for you, click done? That it comes back to what we were talking about earlier about making this is a user experience. The user doesn't want to have to make a conscious decision about who do I choose on this or on that. They just want to be able to have something presented to them, go down the list, click the one you want. AI in the background does all your KYC, onboarding, done that. 5 minutes after you take your brand new phone out of the box, you're connected and talking.
Yeah.
Sorry, heretic there.
No.
Yeah, no, I'm just thinking if I'm an operator, I'm shaking in my boots.
Precisely.
You've just taken away my, we spoke about how tough they're doing it. If you just boil it down to, select as a purely wholesale provider, lowest cost, lowest rates without the ability to differentiate. I'm not sure. I think it's kind of like the eSIM model, like the travel eSIM model, where you go through them. I'm traveling here, traveling. There's lots of choice. Like I get it for that market, and that's disrupting the whole roaming market, right? Like that's so there's kind of like a parallel there. But I think I get it from a customer experience perspective, but what that will do to the industry, I worry. And the other one, actually, it's not a handset manufacturer, but a very real thing is Uber. Uber have talked about. I've met with them a few times. I've been at various MVNO conferences. You can order, you can travel, you can order, you can order your food, you can order your alcohol, you can pretty much do anything on Uber. Why can't you order your mobile service?
Absolutely. Absolutely. Yeah.
It's a similar sort of thing. Look. It'll be interesting to see where it plays out. I don't have the answer, but there's got to be a way where where the operators do are able to earn a sustainable return, or the quality of service will just decline, and we don't want that either.
And this is the juxtaposition, I think, is that like if you disintermediate the operators altogether, then who's going to invest in the infrastructure? And the infrastructure is critical service in all countries now. Like you got to have telecoms infrastructure in order to be able to run the country, run the economy. So it's super interesting. And I think
Hamish, just to interrupt you there, but you say that the operators have sold off their towers. The hyperscalers are perfectly capable of taking Open RAN. So you could actually find, and I'm not saying you need the infrastructure. I would agree 100%, and nobody's going to allow you not to have the infrastructure. But who supplies it, I think, may well change from that perspective.
That's a good point. It's a good point. Towercos, it's interesting to see. That's another whole podcast, maybe, but it's interesting to see the role that they play going forward. And obviously, spectrum is the thing that you can have the towers, but you need the spectrum in order to be able to broadcast. But yeah, look, overall, it's super interesting. And yeah, tying it back to the outset of the call when we talked about Mobile World Congress, and I think I'm not alone in saying this, that it did feel stagnant, and it was alarmingly stagnant. Like, it's been always quite, you kind of like go to these events and you kind of like, oh, what's new and what's happening. And I'm in the industry. I'm guilty of not finding the point to innovate on, for sure. So I'm guilty as charged as well, being one of the members in the industry. But it does feel like, ooh, something's got to change. And whether it comes from internal or external, I think the disruption will happen in the next few years. But I'm gonna wrap it up there, guys. Thank you so very much for joining, Gary, particularly all the way from Sydney, Australia. Sunny, hopefully today.
That was the first day of rain, actually, but no, it has been sunny.
First day of rain. And yeah, it's always a pleasure, mate. Thanks very much for taking the time to join. And yeah, I'm out in October, just to let you know as well. So I might drop you a note for a beer. My nephew's getting married, so I'm out there for 2.5, 3 weeks or something like that. Absolutely, at the Opera Bar there. Yeah, perfect spot. And if not, then maybe even in between, if you find yourself enjoying a nice French red wine somewhere around the French countryside. Thanks again, mate, for joining. Really appreciate it. Like, great insights. Maybe we'll do it again sometime. And Paul, Paul, thanks as always, mate. Like always, good comments, good analysis. And you're probably sick and tired of hearing me speak because we've been in close contact every day for the last couple of weeks, haven't we? So appreciate the support. Thanks, guys, and thanks to all the listeners. You can find this podcast on www.mobilise.com, our website, or our channels on YouTube, Spotify, and Apple. And yeah, stay tuned for the next episode. Thanks again, guys. Appreciate it. Have a good night, Gary.
Yeah, thanks, all.
Cheers, guys.
See you guys.
Cheers, guys. Bye.